And amid growing economic risks, South Korea's central bank has announced plans to further lower the key interest rate next year, meaning a third consecutive rate cut is on the way for the first time in 15 years. Our Yoo-jin has more.
South Korea's central bank has announced plans to further lower the benchmark interest rate next year in response to economic risks. It said the decision is driven by political uncertainty and changes in the trade environment, which have intensified the downward risks to the economy. This follows cuts of 25 basis points to the base rate in October and November. A further cut would mean it's the first time there have been 3 consecutive cuts since the global financial crisis 15 years ago. In its 2025 Monetary and Credit Policy Direction Report released on Wednesday, the bank stated that it will reduce the key interest rate while maintaining inflation stability, easing downward growth pressures, and carefully managing financial stability risks. In addition to sluggish domestic demand, slowing exports, and the impact of the insurrection shock, the Bank of Korea also pointed to other factors, including the U.S. Trump administration's tariff policies and excess supply from China, as contributing risks. The central bank has forecast growth of 1.9% for South Korea next year, but this could decline further due to political uncertainties and budget constraints. Regarding future rate cuts, the pace will take into account both domestic and external risks, as well as changes in inflation, growth, and financial stability. Officials also promised to implement additional measures to stabilize the foreign exchange market. Yoo-jin, Arirang News.